Hi, I'm Mark Rossano, founder and CEO of C6 Capital Holdings, coming to you from Primary Vision Network. So today we have our EIA show, and we're going to look at what's happening now. How is the hurricane currently hitting? Is there going to be ramifications, based on landfall that is now currently happening as we look at Florida? And then are there any behind there? Because we want to look at how are things setting up going into shoulder season. We obviously had a nice draw on the crude side. It's still fairly in line with seasonal levels. The draw was rate of change was a little bit faster, but then on the other side, gasoline had a small draw. We were expecting some additional builds, and then when you look at distillate, you continue to see some small builds, but again, well below what we need to see going forward. So we want to understand how we're setting up going into September, October. What do we expect with Saudi Arabia, given the fact that there's growing expectations they're going to keep that cut going into the October? Then in the second segment, we're going to look at U.S. demand, how that's shaping up. Things got a little bit weaker on the diesel side, the distillate side. Not surprising. That's kind of where we think we are. Because if you remember last week, we were saying that we thought that diesel had kind of run its course. We want to go through how the hurricane season is going to impact us. Are there going to be any lasting impacts from Florida? And realistically, the short answer is no, but we want to look at how things are going to shift in the next week or two, given some of the movements. And then in the last segment, we want to look at refined product exports. We've had another big spike. How is that going to change the crack spreads? How is that going to change storage on a global level? And then what are the impacts on the crude side when you start looking at refining capacity, refining activity, and how we're shaping up going into maintenance season? And then where are we going to be come winter? Now, when we look at winter, we want to see how are we setting up coming out of that peak season when you look at summer, in summer driving season. So that's when we always turn to the total oil product and stocks. You can see that the surplus widened from 53 to 53.3. So one of the things that we've been very consistent on is when you look at the totals, things are just going to go fairly sideways. We don't see a huge shift up or down at this point in time. When you look at then crude stocks, land, and floating, because I know some people, at least they like to look at one side and not the other. We look at both and just put them together, then take them apart and see where some of the shifts are. And here you can see that the surplus narrowed from 60.4 to 57. But it's important to look at where have we been historically. And you can see that we're actually higher than we've ever been when you go back to 2017 to 2019. And then in 2022, when you look at some of those different pieces. And when you look at, again, where we are, where we're sitting, obviously we had some big spikes in 2020, but at the same time, that drawdown happened pretty quickly when you're looking at some of these other areas. But it's important to look at, what is, even on a normal level, we're still at the very high end when you're thinking about the positioning. Total oil product stockpiles, the deficit narrowed from 7.4 to 3.7. We've been saying that we're just going to kind of hug this line when you look at just that average from when the average is set from 2017 to 2019 and 2022 to try to take out some of those extremes and try to see, what is that quote unquote normal. Now, when you break it apart, gasoline has had some sizable builds. We've had some increases again on the middle distillate side. We want to go through some of those different pieces because we do think there's going to be builds in the middle distillate component and then the gas and the light distillate side, and we want to see where is that going to happen and how quickly. So when you look at gasoline in general, we're starting to flip over into winter grade. When you look at that contract coming into October. For Florida, they have a EPA waiver so that you don't have to run summer blend right now, just to make it a little bit cheaper and make it more available as the hurricane passes through. And it's important to understand that when you look into October as well, into September and then into October, there's an expectation that Saudi's going to maintain their cut of 1 million barrels into October. If you remember, Russia pledged 500,000 barrels a day in August. They've walked that back and they're going to reduce it to only 300,000 barrels in September. So, which is something that we saw coming just when you looked at some of the flows, and we want to go through that in segment 3. So breaking it into its pieces, you can look at total land storage. The deficit widened from -5 to -6.7. So as you can see, it's very close to that drop that normally happens. That's why on the intro, we were talking about how we had a draw. Seasonally speaking, we should have draws. The question is, what is the rate of change? West of Suez, the deficit widened from -2.5 to -3.5. So you can see the deficit was a little bit wider, so the rate of change was a little bit steeper. East of Suez, the deficit widened from 2.5 to 3.2. But that is only looking at Japan. When you factor in what's happening in China, that's obviously higher. So again, things are pretty normal when you consider the land storage side. So the bigger component that is, where things are a bit still abnormal is when you look at total floating storage. The surplus narrowed from 46.3 to 25.8. We got a sizable pull of product off the water when you look at Asia. When you look at some of these in the Middle East, some of that Middle East has gone into transit. We want to look at the different components at the beginning of segment 3. West of Suez, the surplus widened from 0.6 to 4.9. A lot of that was driven by Europe and the North Sea. So we had prices that were a little bit higher, and they've actually started to cut some of the physical pricing, and that's because we've had some decent buildup in floating storage there. That'll clear. It'll find a price, but you can kind of see where it is. East of Suez, which is the Asia and Middle East, the surplus narrowed from 25.9 to 13, and it's tracking almost perfectly to 2022. So we want to look at, is that going to change? A lot of that was driven with product coming out of storage in China, in the Asian markets, but it's a flip essentially. So they're drawing down crude, but they're just plowing the product into the market, and we want to look at how is that going to change and shift as we head into the winter months. So when you look at the crude supply adjustment in the U.S., you can see that it's low. That you typically get that normalization into month end, because month end is where you true up a lot of the exports, imports. So that's something that should remain here. And then normally it starts to get a little bit crazy as you get towards the second and third week of the month, because there might be some delays, there might be some shifts. So again, nothing crazy to see here. Crude stocks had a draw of in total of 9.99 when you factor in some of the build and SPR. In commercial crude, we had a draw of 10.58. It was mostly driven by PADD 3. PADD 3 had a draw of 9.16. So against the 5-year, that's 2.6 million below the 5-year, and we'll show the chart in a couple slides. That is really kind of thrown off by 2020. When you look at the last 5 years, it's actually obviously the last 5 years minus 2020. Things are pretty normal. So that's something that we should see some additional draws, though, because exports are still robust. The question's going to be what is happening in Europe, and are we going to see some weakness in demand there? Our early guess is yes. Our view is that Europe was going to stay strong. Asia wouldn't continue to buy, or at least our prices would get too high. But then Saudi Arabia was kind enough to have an increased OSP, which then made the U.S. grades more competitive. So Asia stayed strong. Now we actually see some softness in European demand. So we do see some of that declining, but again, that's going to take time over the next couple weeks as it presents itself. PADD 2 had a draw of 2.83 million. That's something that is, again, it's a little skewed when you look at 2020, but things are still, over where they were last year. Cushing had a draw of 1.5. We want to look at that. That's a nice drop. Seasonally speaking, there are drops at this point in time in Cushing. It's just we're starting at a much lower level. So again, this is a bigger move. It's still above where we were last year, but we want to look at how is that going to change over the next couple months. Crude oil inventory, excluding the SPR, you can see that we're tracking very closely to where we were in 2019 and 2021. We're still above where we were in 2022. So again, this is, I think, an important piece when we look at the data here. You can see that things are kind of moving in a very seasonally normal level. Now, we normally kind of flatline and then start to see some of that activity increasing. I should say storage increasing as we prepare for October. So again, you have refining activity slow down a bit. and then some of that crude gets pushed into storage. Now, when you factor in oil storage products, you can see that we're right around where we were, a little bit higher than where we were in 2022. Again, there's a bifurcation in that. Gasoline, we do see some sizable builds in comparison to historics. And that's important, and that's where we see things flatlining. Distillate is still very low. It's climbing, but not to the degree that we need. And then we do see some of that storage. So we do think that it's going to kind of flatline, follow this trend, have some builds as we go into the middle of September, and then start to see some small increases into the end of the year. Total U.S., when you look at PADD 3, as we were saying, we are right where we should be. Only that 2020 and obviously 2016 are above. Everything else, we're right clustered where we're supposed to be. So again, not too much to say here. The hurricane that hit will impact demand. It avoided all of the refining. Even power outages shouldn't hit any of our production facilities as well as refining facilities, but this will impact demand. So typically you have everyone rushing to make sure that they have gasoline in their car. Everything is situated, so you get a little bit of a bump, and then depending on damage, depending on how extensive and how long this kind of hugs the coast, you typically have a bigger impact to near-term demand, and then obviously people then get back to normal and things. So there's typically 2 to 3 weeks where you could get some demand hits in general. So now when we start looking at Cushing here, you can see things are moving down. There's other years where we're on as a rate of change is quite normal. It's just we're starting so much lower. So that's where we will start to flatline. We do expect to see some additional draws, but it's just the depth of those draws is going to kind of normalize just because demand is going to wane as we get into refining maintenance season, which is typically the shoulder period. Some of them could start now, depending on economics. It's likely that they start closer towards the second week of September, and then obviously have some of those rolling pieces throughout. And it also comes down to how long are they going to be down. Like the UAE announced a 2-month turnaround. Is it 2 weeks? Is it 4 weeks? Is it 2 months? That is also going to kind of depend on where you're going to set up your turnaround period. When you look at runs dropped 1.2% from 94.5 to 93.3. There was a fire down in Louisiana that impacted PADD 3. So it was a fire in one of the storage tanks, so they had to reduce runs. They didn't ever actually stopped. If they did, they just reduced. That'll stay reduced until they do some investigation, make sure everything's safe. And then PADD 5 had a little bit of a slowdown as well. But again, PADD 2 still clipping at a healthy rate. It's unlikely now because of the timing of the year that we get back to 94.5. That was likely it was slightly higher previously, but we're probably past the peak at this point, and now we'll hang here. And if you just look at the seasonality, we kind of flatline around this point, and then you start to see that pretty consistent drop as we get into the middle of September. Then things flatline a bit. Then you have that steeper drop that you get as people go into deeper turnaround, which is that October, middle of October, end of October, and then you start to see those increases as you go through November, December. So again, that's what's going to put some additional crude into storage, and that's again very seasonally normal. Nothing crazy one way or the other. Imports dropped 316,000 barrels a day. We're still elevated, and that's because it's interesting because even though PADD 2 had a big drop, which we were saying it was, it's still above the 5 year. So we will get a little bit of a bounce in PADD 2. PADD 3, just as we said last week, it's not. We're not going to get a huge surge or drop. It's going to be fairly steady at this point. I mean, we could see another small decline or another small increase, but it's going to hug within this in this band as PADD 5 remaining lumpy. Increase 355,000 barrels a day. Well above, but again, that's just going to fall away next week. PADD 3, as we've been saying, it's not going to go down the lows. We're still going to trend below the 5-year average, but it's going to be at the higher end of the lower band, and that's something that we see continuing for the remainder of. Well, obviously we're already here in September, in August, but also into September. PADD 2 had a big drop, which is actually very close to seasonal norms. It's still above the 5-year. We think it's going to stay above the 5-year. There's more than enough demand to pull that down. When you look at implied demand, here's where you can see a little bit of a bump as the the hurricane approached. Again, it's small. As we've been saying, we're going to stay between that 8.9, 9.1, and we're here. It's still well below the 5-year average. We're going to show kind of where things sit. Distillate had that additional drop of 134,000 barrels a day. We don't see too much of recovery. Jet had a nice pop, but again, that'll fall away fairly quickly. And then propylene had a drop of 335,000 barrels a day. Continuing to see some of that pressure when you look at the chemical side. Other oils, the catch-all of everything. Again, there's a lot of that reprocessing. That's where we see some of these increases in blending components coming from. And it looks good, but again, there's some of that bandwidth that's just kind of a dump and a catch-all. So we expect to see a sizable reversal in that. But again, that's just a matter of timing. Implied demand, you can see here that we're right where we were in 2020, still very well below the 10-year average. As we've been saying, we don't see it getting much better. This is actually worse than even we were expecting. We thought we were going to get a little bit closer to the 10-year. Instead, we haven't been able to. We have, we're coming into Labor Day weekend. You typically have some strong demand, as people do stuff into the weekend. Obviously, that's going to get pushed sideways because of the hurricane. There's going to be cleanup. People are not going to drive as much during the first, let's call it 2 to 3 days. And then you'll get a nice little bump, but the slowdown during the week is going to impact some of that Labor Day activity. This is kind of pad 1C, so it is a sizable demand area when you think about Florida up and through South Carolina, especially when you consider how the migration patterns have really been over the last, not even since COVID, but over the last 10, 20 years, you've had a sizable shift down. So again, that's going to be another impact. But again, it'll normalize. It's weather, it's things, or as Paul Rudd sings in Forgetting Sarah Marshall, weather is weather. Here, when you look days of supply, nothing crazy here. Things are running very smoothly in terms of historics. Gasoline storage, as we were saying, we expected it to go sideways and start to creep higher. And that's going to run into closer to the seasonal normals. And that's what we always like to say is typically there's a seasonable drop right now in storage, and we're just not getting it. And that's because we've had a nice increase in imports, as we've been talking about. That arb has closed. So that's going to put more gasoline into Europe. But now with the storm, you should start to see some of that open back up. But again, these are going to be things to watch as we go through the next few weeks. Distillate, again, build, but still very low. We still need to see that crossover. And then jet is just hugging that average. They're trying to balance jet fuel, kerosene, distillate, and that's what we're going to continue to see. On the curve basis, we see some softness in the front month. I think some of these things are getting priced in. We are at the end of the season. We haven't really seen the demand that I think people were hoping for. We were bearish on the demand side, and demand finished lower than we thought. So again, that's where it's starting to come down. But realistically, you still have Saudi. Saudi has been very clear they're willing to extend and broaden their cuts. So it's hard to say, oh well, we should go to 75 on a Brent basis. It's maybe we should based on demand, but you have that supply that is always in question that you could see them take off the market. Floating storage in the U.S. fairly stable. We don't see too much changing from this point. Likely it'll just kind of bounce sideways, maybe go a little bit higher as we have that normal fluctuation, but otherwise things will be fairly situated at this point. So that's what we have for you on the more of the broad view. In the next segment, we're going to go deeper into the U.S. storage, U.S. demand on the refined product side, and how we think things are going to shift briefly for the hurricane, and then how are we setting up going into shoulder season.